number one, the emphasis that we put on building the product that enables our customers to do things in a way that regulators need to see. So everything done in Cobalt is extremely auditable, has kind of full end-to-end traceability of where information come from, who approved it, when humans override the AI
Mm-hmm.
outputs, and how they're able to give feedback and kind of model the AI to follow their own unique processes. And so there's a really large element there. If Cobalt identifies an issue in a SOC report, for example, a CUEC that doesn't map, as a really easy example, instead of just saying we have this issue and you're going to have to remediate it, if you just tell somebody that there's an issue in this report, they still have to go through, figure out where it is, go to the right page, figure out exactly what's going on, and then take action. Versus if AI can actually immediately send you, open up the report, highlight the exact missing control, highlight what it's cross-referencing, and just give you what you need instantly, then you don't need to take any time to verify it because it almost verifies itself and gives you the evidence. So we've designed Cobalt in a way that allows institutions to benefit from AI without having to trust it because it's
Mm.
so explainable and traceable and has so many like anti-hallucination mechanisms in place.
Right.
I think those are the two things that really differentiate us. And I think also, I think having a product that works well is also just the start of it. I
Mm-hmm.
think when institutions are using Cobalt, how do we get into the conversation? Like regulators know about us. They've tested us out. And so we've spent a lot of time actually putting this in front of the right people and like building a layer of trust that can make people feel comfortable that they're using it. There's a community around folks that are using it. And so all of that stuff really just helps put people at ease because it's
Mm-hmm.
it can be, while like I'm always advocating for it, it can be kind of scary to have your first like larger deployment of AI. No, this, you can use AI to pull out all the CUECs, pull out all the exceptions, manage all of your controls within 10 minutes. And that's going to be the standard of the speed of work that's being done. And so I think that's a really critical way that I think the whole industry is going to shift in seeing what is table stakes and what isn't. I think even things like generating reporting on top of all of these things that are highly, highly manual today, but really
Mm-hmm.
entail slicing and dicing documentation. Things like that are just going to be part of the foundational tooling that people are using, and that's just going to be an automated process. On the TPRM side, I think we're also going to see a shift to continuous monitoring. And that's something that we've already kind of started to build and are just going to keep doing it. So, for example, with
Mm-hmm.
Cobalt, maybe pre Cobalt, there are people that have to make sure they're doing some research. Okay, for our critical vendors, is there any adverse media associated with them as we do our
Mm.
routine reviews? I think
Right.
that kind of that reactive work is going to shift to relying on tools like Cobalt or AI driven tools to say, alert me when any of my vendors are involved with any kind of consent order or security breach or
Mm.
any kind of adverse media litigation. Don't
Yeah.
wait for us to go find out, or even worse, don't wait for the vendor to tell us 2 weeks after it's too late. We want to automatically monitor what's going on. And the second it happens, I expect to know. So I think this waiting period, this like information gap
Mm-hmm.
between something happening and us having to act on it or know about it is going to shrink to become real time. And it can only become real time if it's happening automatically in the background. There's no way you can have people 24/7 looking for this stuff online. And there are some news feeds that
Right.
try to do it today, but they have so much volume of data they're sending you. It's
Mm-hmm.
again manual to dig through all of your alerts and figure out what's going on. So I think very clean, targeted alerts, continuous monitoring is going to be big. And then I think zooming out beyond TPRM, we already do some stuff beyond TPRM and have a few
Mm-hmm.
modules. Like we're building a lot of marketing compliance for folks to do
Ah,
automatic UDAP
great
checks,
add-on.
all of their collateral. And so
Yep.
that's been a really big one that's growing a lot. Another big one that's growing is when we first started, actually, the first bank that used Cobalt added themselves as a vendor and ran all of their internal policies, procedures, disclosures through our checks, our risk assessment,
Mm-hmm.
and our
Mm-hmm.
regulatory reviews. So they kind of onboarded some folks from their internal audit team and said, hey, can we test this out for them? It was a really big success. And so now
Hmm.
institutions are running their own materials through, running risk assessments on themselves to support their audit functions. And It's going really well.
On this episode, we're speaking with Rami Kalmadurgam. Rami? Okay, here we go.
Being focused on the larger, broader community. And why that's really important is that it allows us to create products and services and develop strategies and marketing communication that's targeted to one particular segment, which is what strategy is really all about. It's like what you're going to do, but more importantly, what you're not going to do. And so by us being a tip charter, it removes a lot of the noise of trying to be everything to everyone, and we can just be great for one group of people.
So what's the difference between strategy and planning?
Yeah, so strategy is the exercise or the art of understanding your context and clarifying what you want to be when you grow up and how you plan to get there. Planning is a collective exercise where you have multiple parties involved with various ideas. And so you need to center them around some limited number of strategic priorities. And then you must have some type of methodology to, at least in our situation, score those ideas. Because I can give you an example. We just went through our planning first step, which is the intake process. So we open up our intake form. This is after we've had discussions around strategy and where we're going and what we want to be when we grow up. And then we open up the form to our entire senior leadership team, which is 20 plus individuals. 122 items were submitted.
Wow.
We have 73 things we're working on this year. We expect 26 of those to go into 2026. So now you have to figure out, how do you, keeping your strategic priorities in mind, make sure you have enough resources for the 26 things you already signed up for. And how do you filter through the 122 to get it down to some reasonable amount of initiatives that, one, supports our objectives as an organization, and make sure that we're prepared for the future, addresses all the regulatory challenges and requirements, the infrastructure, maintenance needs. That entire process is the planning process, right? Gotcha. It is the blocking and the tackling of the actual game, as opposed to strategy is the assessment of the competition, the environment, the technology, and clarifying what we want to be when we grow up. So the strategy is really forward looking. The planning is trying to sift through all the different plays that we could run and figuring out what our game plan will be.
Anson just told me to shut my clamshell. This is that moment in our relationship where suddenly it's like, are we too close?
There's not a separate class of people that are just consumers or just employees most of the time, where we tend to be both. And so, but I think as credit unions, we have this history of saying, okay, consumer expectations look like this. And one of them, just as an example of this, consumers expect frictionless opportunities. They want us to remove pain points, remove points of friction. We have to do that for our consumers. And then in the meantime, so I'm going to create this member-facing experience where the user experience is that with one click, you could open an account online. But behind the scenes, the employees are taking 27 different steps in the corporate.
Doing it manually.
Yeah. So that you have this perception of this frictionless experience. And what we're seeing, like the employee side of that, they're like, yeah, no, I don't want to work at a company. We're like, my job shouldn't be that hard. Like I expect a challenge. I expect to have to think critically, but I do not expect to have to do all this work for something that should be frictionless from that side of it. So that's just one of these examples of places where we've maybe looked at it one way from a consumer standpoint and haven't given it the same thought on the employee standpoint. That hierarchy I built said, okay, sort of first and foremost, human expectations are that like you keep me safe. So whether it's me as a consumer and you have my data and you have my money, you have to protect that and keep that safe. But me as an employee, I should feel like I can come to work and not worry about being harassed or discriminated against or, talked to meanly from the member who's coming in to deal with me. Like I should feel a certain level of safety when I interact with the organization. And then once we get that out of the way, then it's that, okay, it should be a frictionless experience. It should be, there should be some ease in working together. And then it should come into like, there should be a really customized personal experience that comes into that. Like you should know what my needs are. Don't, if I'm a 20-year-old or 22-year-old with $100,000 in student loan debt, don't send me a mortgage offer because that's probably not my next move. Like help me figure out something else. But from an employee perspective, customizing this experience for me, like if I have to pick my kid up from daycare at 6:00, don't make me close the branch that closes at 6:00 because I can't be in both places at once, despite the fact that I want to. So can you customize that too? Right. And then finally, kind of that tippy top of the hierarchy is keep my best interest in mind.
Yeah, so Onsetto is my second fintech company I started back in 2014. The first company I started was a company called ClickSwitch, which was out to solve the consumer switching dilemma, where banks and credit unions were investing in digital account opening. And as account opening became easier, banks and credit unions were sitting on more stagnant checking accounts on the retail side. So we built a product that came in right after a new consumer opened an account and really held our hands to get them switched over, focused around getting the direct deposit switched over, recurring payments, delivering a primary and profitable account on the consumer side. Fast forward to what we're doing now. Back when I had ClickSwitch, banks would always ask, hey, can you do a commercial account? Can you switch commercial? The answer was always no. ClickSwitch got acquired in 21 by Q2 down in Austin. I stayed on there for 2 years, and same question would be asked, can it do commercial account switching? The answer was no. Took some time off for a couple of years, looked at the industry, and still nobody was doing commercial account switching. So round 2 with Onsetto, we're out to solve commercial account switching. So right after a new business opens up their new account, we're coming in and we're helping that business get switched over, helping them get the account properly funded to their new bank, get all their AR, account receivables, accounts payable, and payroll, the 4 main pillars. So our customers can start to identify primacy on getting a commercial account switched over. Yeah, I think for decades, banks and credit unions, they're tried to win on commercial relationships based on rates, treasury services, or digital services. But really what we've figured out is the fundamental issue is you can offer all those things at a very competitive rate, but it's really hard to get the business to actually switch over because they're leaving the bank or the banker meeting and saying, I just don't want to deal with the complexity of switching. So we're trying to address the biggest bottleneck, which is all of these banks are competing on rates and treasury services and digital services. But if you can go in there and say, we're the easiest bank to switch to because we'll help you get switched over when it comes to getting all your customers notified to make payments into the new account, all your merchants updated to get pulled out of your new account, and helping you get your payroll set up. So we're trying to address the biggest bottleneck, not necessarily, it's no longer account opening because they got that figured out. Commercial account opening is really scaling and doing great. But I think, our customers, they're sitting on more stagnant business accounts than ever. And what's happening is, banks or businesses are saying, yeah, I'll open up an account with you if I can get this rate. And then the bank's saying, I can get you that rate if you move over your primary account to us. And they're saying, yeah, I'll do that. Well, they get the rate, they open the account, and then the account sits stagnant because they already got the rate. So we're trying to give the banks a competitive playing field now and saying, we got to get you switched over. You said you were going to do it. We have this tool we're offering you now to make it very seamless to get switched over to us.
On this episode, we're speaking with Mitt Romney. We're speaking with Mitt Romney.
I'm just going to tell you right now, you are standing between me and a giant poop. So you get this right.
I'm going to pass out. On this,
what we've done here recently is, we're not trying to be a technology company, but we do have strong capital. We realize we need to partner with other individuals, fintechs, other technology partners to deliver and help deliver some technological solutions to credit unions to help them grow and to help them survive. And so we may not necessarily create them internally because we're not a tech company, but we definitely have the capital and the ability to partner with folks that have that. And a lot of partners like to partner with us, a lot of vendors, because the vendors are out there have a solution. They don't have the relationship that we have with all of the cranes. So they have a solution. We have the relationship. Typically, it's a great partnership that we can cover up and down the East Coast nationally with a lot of crane relationships we've had for many years and deliver some of these technological solutions that the cranes may not be aware of. This past year, it's trying to grow. It's data and AI. And we did that first of last year, went out to some of our larger cranes and said flat out, where can we help as a corporate? What do you need? And the predominant thing that came back is we have a lot of data, don't know what to do with it, and we need to embrace AI and don't know where to go. Could you help?
Was it that led you to partner with Vertus AI?
That's exactly what it was. And it was just fascinating to me as I look back how it all kind of came together.
When you think about blockchain, Metal blockchain itself is actually the only layer 0 blockchain built for compliance. So Metal blockchain is the base layer blockchain. So in order to deploy a layer 1, you essentially need to have a layer 0 to deploy that. The benefits of that blockchain gives you full control and customization of that chain. So with Metal, for example, we're actually the only one that has been built on that compliance of BSA, AML, GDPR standards. We enable secure private subnets, a number of different tailored solutions that allow bridgeless interoperability. When you think about digital identity, on-chain data storage, enhanced audit, tokenized assets. So Metal blockchain has kind of built this for the banking industry. The biggest value on top of that is that Metal is also one of the fastest, if not the fastest, blockchain in this space. When you think about infinite subnets, we're less than, I think, a half a second transaction finality versus when you think of Bitcoin, it's like 60 minutes, Ethereum is 6 minutes. So when you talk about processing speeds, we are the fastest blockchain with compliance that's built in that gives you that control.
I've always thought about, ecosystems as networks, right? You had VisaNet was a network, you had MasterCard access. So I've always thought about kind of this network mentality. It's kind of why we require CUFX, CU Exchange, it's like the network. And so, that layer 0 becomes important again because, you looked at like who owns that platform, that network. Does a core own it? Does another blockchain provide, own it? So the lens that we're looking at for Metal QSO is having what I'll consider like that private network or that network that's owned by the credit union. So when I start to think about those use cases and that peer-to-peer, okay, great. How do I do payments cross-border within that credit union ecosystem? So, our intention is to bring that network community and then also the products and services. So it's all about the network, who owns it, what's the data associated, what's the cost associated, what's the performance associated with it. So bringing that into the credit union ecosystem is that, what we call private permission kind of network. Metallica's language is subnet. Used to we call it a node, but in principle, it's the same. All about the networks.
Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this has been an amazing year for our series. We are so excited about the people we've met, about the conversations that we've had, and I really am very, very appreciative to each and every one of you for listening, for liking, for subscribing and sharing. It has been a monumental year for the podcast. So I'd like to thank you. I'd like to thank our producer, Anson, for all of his hard work. Without him, none of this would be possible. Thank you for an amazing 2025, and we will see you next year in 2026.